Welcome to Shift, the college admissions ACT, SAT, and CLT podcast for a changing world. I'm Cassandra with Achievable, and if you're a parent trying to help your student prepare for the ACT, SAT, or CLT without the stress, the sales pressure, or the four-figure price tag, Achievable was built for you. Our courses help students study smarter, stay motivated, and actually retain what they learn, all in a flexible format that fits real family schedules. You can try Achievable free at achievable.me, and if it's a good fit, use the code podcast for 10% off at checkout. Now, let's get started. Today we have Lance Morgan with us, and Lance, I'll pass it to you to introduce yourself.
All right. First of all, thanks for having me on. My name is Lance Morgan. I'm the founder of College Funding Secrets, and it's been about a decade now that I've been trying to help families with a creative way of paying for college. I have 5 kids, so I had to get creative. And so that's what we help families with, better ways and more strategic ways to pay for college and reduce the cost of college.
Yeah, fantastic. And thanks for being here. So, today we're talking about basically hidden financial decisions that might actually make college more expensive. And so, to kick off the conversation, what would you say are maybe some of the biggest misconceptions that families have about saving for college, financial aid, and the standards when it comes to college tuition?
Well, I have always liked to say that how you pay for college is 10 times more important than how much you pay. I think the biggest mistake a lot of families make is they focus so much on how much they're going to pay for college. They are focused on getting scholarships. That some families make it a full-time job trying to find scholarships. They're looking for ways to get financial aid and all the free money for college, which of course is good. We don't want to avoid the free money for college. We want the free money for college. But it's how you end up actually paying for college that costs families more than they think. It's the cost, it's how you pay for college that is such a big impact.
Yeah, I think that makes sense. So, I guess then, can you dive into some of the better options maybe for how to best go about paying for college?
Let's start with the most classic 29 account. We all take our kids to elementary school and they give us this brochure on kindergarten, first day of kindergarten. Here's this brochure on a 529 account and why you should start saving for your kids' college while they're once they start kindergarten. And I know a lot of our clients will start thinking about it when the baby's still in the womb. And I know that we all wish we would have started that early, but a lot of families, it's like senior year of high school and it's like, holy cow, it's knocking on the door and I'm not prepared. So whether you start when the baby's in the womb or whether you're last minute planning with a senior in high school, the most common way is to pay for college using your savings, whether it was a 529 account and whether you have a specific college fund like a 529 account or whether you maybe have a Roth IRA that was maybe earmarked for college, or whether you're just going to take money out of savings. No matter what it is, a lot of families will pay cash to a certain extent, maybe not all because they can't afford all. Maybe they have to take out some loans, but they're going to just pay cash for college. They're going to drain their savings, their college savings, whatever it is. They're going to drain their savings and pay cash for college. The second most common option, of course, is going to be the loans. A lot of times families tell us, I can't afford to pay this high sticker price for college, so I'm just going to take out loans, as if that's magically going to fix the problem. And then 5 years later, those loans are coming due, and they're like, wow, I can't afford this college loan payment. So the most common ways to pay for college would be save in a 529 account or save in some sort of a savings, and then spend the money on college, or take out loans and then pay back all those college loans. What people aren't calculating, they're not calculating what that costs them in their retirement. That's usually when you're between 45 and 55, your kids are going to college, you're in that 45 to 55 range when you're at your peak income earning years. And that's when you're supposed to be saving as much as you possibly can so you can retire. You can see it off in the distance. You're only 5 or 10 years, maybe 15 years away from retirement, and you're trying to save as much as you possibly can for retirement. And now you're spending $250,000 per kid to go to college. That really takes a damper and puts a damper on your future and your kids' future, their inheritance even. That opportunity cost, we call it. Opportunity cost is the most expensive cost of college. The opportunity cost is what your money could have earned in retirement if you didn't pay for college. Now, I say that, but I also am not suggesting that we don't pay for our kids' college. I'm not saying that we shouldn't pay for our kids' college because it's too expensive or because it's going to hurt our retirement. Because I know a lot of families that would work the rest of their lives if it meant helping their kids pay for college. And I think that's fine. If that's their goal to help their kids pay for college, then they should help their kids pay for college. But they should do it strategically and they should do it without hurting their retirement.
Yeah, I think it's really important to be looking ahead like that instead of just tunnel vision with the here and the now. And so the next question I have is in regards to financial aid.
Mm-hmm.
And how can maybe the traditional college savings or even scholarships or things of that nature, how does that affect financial aid? Or even going further with that, owning a home, having investments, things of that nature. Can you talk a little bit about that?
Yeah, so financial aid is based on income and assets of the parents and the students. And so they're looking at your income and your assets, but not all of your income and assets. They don't look at your retirement accounts. And so they only look at what money they consider to be available. Some schools look at equity in your home, other schools don't look at equity in your home, but they all look at the equity in an investment property and they all look at 529 accounts and they all look at your savings, your brokerage accounts, your kids' savings accounts. These schools are looking at the assets that they consider to be available for college. That determines if they're going to give you any free money. And it doesn't sound fair that a family who saved all those years for their kids' college into a savings account like a 529 account, they save all this money for their kids' college and then they get penalized for having all that money. Whereas another family who maybe lived paycheck to paycheck and now they're getting to the point where their kids are getting ready to go to college and they have nothing saved, they have no assets, they don't really have much to speak of, they're going to get lots of free money when the family that saved and has all this money saved, they're going to get penalized for having that money. They're not going to get as much free financial aid money.
Yeah.
Yeah.
Yeah, and that is the reality of it. And it does maybe not make total sense, but then it also does make
Yeah.
sense in a way. But yeah, that's how it's structured.
Yeah.
So when it comes to timing and thinking about when to start saving, when to start thinking about college affordability, looking at options for schooling and how that looks on the financial side, what would
Mm-hmm.
you say is the best time to start? You already touched on it. Obviously, before your child is born would be great. But is freshman year of high school too late already? People are starting in middle school now.
Yeah.
Is junior year too late when you're just starting kind of college applications and things of that nature?
Yeah. Definitely, it's never too early, right? It's like the oak tree analogy. You want to plant the oak tree as soon as possible. So it's never too early to get started, but 90% of our clients have a senior in high school. It's knocking on the door, it's right around the corner. They're about ready to pay the first tuition bill or whatever the case may be. So it's also not too late. It's not too late either. If you have a senior in high school or a freshman in college, it's not too late to still strategically pay for college. Now, you might pay more. You might end up paying more for college if you don't prepare early enough. If it is last minute, you've already selected the college, you're about ready to go. It's not a matter of choosing a different school at this point. So I'm not saying that you're going to be paying less. You're probably going to be paying more than you should if you start late. But there's still a better way to pay for it. No matter what, there's still a better way to pay for it, which we can get into. But I would say the ideal time is figuring all this out before you start going and looking at schools and before you have your kids start to create that list. Because I think the mistake most families make is that they don't do the proper preparation beforehand, right? So it's you start going on all these family vacations. In fact, it reminds me of a client. They were from California and they traveled to New York every year for family vacation. and took their kid to NYU. And it was like this kid was raised to go to NYU. And the dad never thought she would get accepted. Mom always thought she would. So dad was never worried about the money because she won't get accepted. Well, turns out she did get accepted. And this child had been raised on NYU. And
Right.
so, of course, you can't back out at that point. And so dad has to figure out how to pay for it. It's like Christmas morning. They're all excited. They get accepted. And most parents aren't going to crush those dreams, right? And so, likewise, a lot of families in that sophomore or junior year of high school, they start going on summer vacations and they start doing all these college visits, right? And they don't know how much those colleges are going to cost. They have no idea. They don't do any of that planning. They think they have to wait until they get those financial aid offers back in the spring of the senior year of high school. So they just go to these schools that the kid selects. And the kid selects all these schools. They start visiting all these schools. And half of these are like 5-star resorts. I would like to live at some of these campuses for 4 or 5 years,
Right.
right? These colleges are amazing. Some of the cafeterias, the food, the amenities that they have. It's like staying on some Airbnb resort for 4 or 5 years. And so, of course, the kid wants to go there. Of course, the kid's going to put that school on their list. But what if that school isn't a good financial fit? What if you could find out ahead of time that school is not going to be a good financial fit? What if that school is not going to give you the free money that another school is going to give you? What if one school is going to give you a lot of free money, the other school is not going to give you any free money? How about go do some visits to the schools that are going to give you the most money? Like, how about as parents, we kind of guide our kids to the schools that we've already kind of looked into, and we're like, okay, these are the schools that we can afford. Out of all these schools, let's choose one from this list instead of just randomly going to all these top tier schools that are, of course, the kids are going to want to go.
Yeah, I think that's a great take. And I think it comes down to communication. Parents
Mhm.
and children need to be talking to each other about what is feasible and how to get to where they want to go. And I think that can be something that parents aren't used to talking to their kids about their financial situation. And so maybe this is the first time that you're bringing it up. Or maybe you're like, oh, let's maybe not even talk about it. We'll figure it out and you just get your grades up and all of that stuff.
Yeah.
But I think it's important to be on the same page because you're both going towards the same goal. So
Mm.
it's a lot easier when you know where each other is at on that.
Yeah, that's 100%. Yep. Exactly.
So I'm curious too, is there ever a time when you recommend that people should not be looking into financial aid? A lot of people might assume that due to their income and their assets, they probably won't even qualify, so they just completely leave it off the table. Do you think that's a wrong assumption?
Okay, so good question. So most families that are decent income assume they're not going to get any financial aid, right? And in some cases, they may not. We have some calculators, and that's why I was mentioning before. Like, you can look into all this really early on. See, freshman year of high school, we can create a strategy and we can look at what the financial aid might look like, right? So we have calculators to simulate the FAFSA and the CSS profile and some of these financial aid forms, right? So we can simulate that process early, and we can see if they're going to qualify for any financial aid. And then we can look at strategies to increase financial aid. So it comes down to income and assets, right? So sometimes that might be a restructuring of assets. But even if you restructure assets, you still have a lot of income. So it might require what most people don't realize and look into, and this is where most people miss, is it might require some tax strategies. It might require tax strategies to reduce the income on paper. I'm not saying quit your job. I'm saying take advantage of
Right.
some tax strategies, right? Some tax strategies that could reduce your taxes. We call those tax scholarships because every family
Hmm.
qualifies for tax scholarships. Doesn't matter how smart your kids are, it doesn't matter how much money you make. Every family could reduce their taxes. So if you can reduce your taxes, that's free money, right? That's free money from the government through tax savings. We call those tax scholarships. Now, if you can reduce your income on paper and you can go from making 300,000 a year to making 50,000 a year on paper, then you might actually qualify for financial aid. So by repositioning some assets, by implementing some tax strategies and reducing your income and moving some assets around, you actually might qualify for financial aid. But then again, it's going to come down to the school. Some schools don't look at losses. They don't count losses. A lot of your top tier private schools, they're not going to take into account those tax deductions and those losses. They're only looking at your W-2 income. But some schools do look at losses. Some schools just look at your tax return and see how much your AGI, your gross adjusted gross income is. So some schools will actually give you some financial aid that you didn't think you qualified for. And again, that comes down to choosing the right school.
Yeah. And I think that's something that, like you said, not many people are aware of.
Mm-hmm.
And I think it's a really important point to touch on because that could really be a game changer for you
Mm-hmm.
in this situation.
Mm-hmm. For sure.
So, are there any situations where maybe a family's financial circumstances change unexpectedly? What do you think they should know about updating or appealing for financial aid? Like, how would that affect any aid that they've received or even just their savings plan for the 4 to 5 years of college?
So most people don't know that you can appeal your financial aid offer. That's the equivalent of walking onto a car dealership lot and just paying whatever the sticker price is for the car, right? Most people just accept the fact that, oh, I'm not going to get any financial aid, I'm done. But people have to keep in mind that colleges are businesses, and we as families, we are the client to that business, right? We're the ones cutting the checks. We're the ones that are paying them the money, right? So we need to be the ones that are negotiating these offers. And a lot of it comes down to how much they want the student, right? Like how badly they want the student might determine how willing they are to negotiate. And that you don't ever want to use the words negotiate because they don't like the words negotiate. But that's kind of what you're doing, really. That's what you're doing. Okay. The reality of it is that these families are in control more than they think about the cost and what they pay. So everyone, general rule of thumb, everyone should appeal their offer. Now, you made the point that what if your financial situation changes? Well, that's an obvious reason why you should appeal, but everyone should still appeal. And they should just say, look, what can you do? Is this the best you can do? Is there any other free money that we might qualify for? And the worst thing that they could say is no, right? But let's just say you lose your job, or let's just say that your income goes down, or let's just say that there's a divorce situation, or whatever the case may be. If anything at all changes in your financial situation, because let's be honest, you're filling out the financial aid forms like basically 2 years before your kid actually goes to college, right?
Right.
So a lot of times people's financial situation is going to change because it uses that prior year tax return. So if a kid's going to go to college in 2028, they're going to look at the 2026 taxes. There's a lot that could change in that time frame. And so the appeals process should have that dialed in. You should say, "Hey, my situation has changed and this is why I think I need more free money," basically.
Yeah, exactly. It's like you can't win the game if you don't play. You have to at least give it a shot because, like you said, worst case, no,
Yeah.
nothing there. Okay, I tried, and you never know. There could be something there that you missed.
Yes.
So it's
Yep.
always good to try.
Absolutely.
And then my last question here is how do parents, you touched on it a little bit, but how do parents balance saving for retirement and saving for college? And then how should they be thinking about those priorities?
Okay, great question. So this might open up a can that we can continue on another episode. But the idea behind the strategy to pay for college is that if you pay cash for college or take out loans and pay back loans in either of those scenarios, which is covering 99% of what people are doing, okay, in either of those scenarios, that money will be gone. Okay. It's like buying some sort of an expense or paying for an expense. Every month that you pay a utility bill, that money is gone. You're not going to get it back. And it's not that paying for your kids' college is a bad thing. It's a noble thing. It's great. They're going to have a college education. They're going to have a great career. You're going to affect generations to come, whatever. It's a good thing. It's a good thing. But it's still an expense. Okay. No matter, you could argue that it's an investment in your child and it's an investment in their future. And hopefully they do get a good job and you can move in and live with them when you're broke in the future. but,
Yeah.
so maybe you're investing in your child so you can live with them someday. But ideally, we want to take the money that we were planning on using to pay for college and we want to buy an asset. We want to buy an asset like real estate. Okay, like you can see the Scholarship House logo behind me. We call them scholarship houses. Okay, so we tell our clients to buy a scholarship house to pay for college. And what that means is that when you buy the right kind of real estate, it's going to reduce your income to the point where you might pay zero taxes just by buying the real estate. So you take the same amount of money, and I'm talking like, let's say you have $100,000 saved for your kids' college, and you're about ready to go spend $25,000 a year on your kids' college, right? Just basic, simple, low end. That's like the cheapest school in the country, right? So $100,000 that you have that you're planning on paying for your kids' college. You take that $100,000, you go buy a scholarship house, okay? That's just a down payment, of course, a down payment on a scholarship house, okay? And then the cash flow from that house pays for college. And it also gives you tax savings to buy more scholarship houses with. So you could take your tax savings and go buy another one, and then take that tax savings and go buy another one. So we just had a client I talked to yesterday, for example. He makes $500,000 a year. He's paying $100,000 in taxes. That's $100,000 that's on nobody's radar for college, right? Nobody's thinking of what if I could take my money I'm paying in taxes and have that go towards my college plan, right? So this client was paying $100,000 in taxes. And we showed him how to buy a scholarship house that saves him $100,000 in taxes. That house that he buys is also going to start generating cash flow to pay for college. And then he takes the tax savings to go buy another one. And every year he takes the tax savings to go buy another one. And every year he keeps buying more houses. And then he gets more and more cash flow. And he gets lots of tax savings. And you just keep the ball rolling.
Yeah. And it sounds like probably one of the better strategies when you have more than one kid who is going to college, because that
Yes.
is going to add up really fast.
Yeah, exactly.
So, yeah, I'm glad that you brought that up, because really
Mhm.
interesting strategy to go about it, and to also have the framing of college being an expense, because I hear
Mhm.
so often that it is this investment. And in other aspects, yeah, it's an investment for sure, but
Mhm.
financially, like you said, I think that makes sense.
It's a good expense, but it's still an expense. Yeah.
Great. Is there anything that you think we missed that you want to make sure we touch on?
I think that you brought it up earlier, starting early, right? Whoever's listening to this call, just start early, start now, start looking into it. I think a lot of families just they don't think there's anything they can do. And really high income families, they have enough money saved and they have enough cash flow, so they don't try. They're just like,
Yeah.
oh, I've been saving since my kids were born. We run into clients with $1 million in 529 accounts, and that's great. But now they don't see the need to do anything about it because they have the money and they're just about ready to go pay cash. I think most families are not in that situation. Most families are still trying to figure out how they're going to pay for it. Most families are like, oh my goodness, I need free money. So they basically give their kids a full-time job trying to get into scholarships, which we all know there's a lot of people that can help. People can help with scholarships. People can help with financial aid. My favorite book is called Who, Not How. And most people have never navigated this process before. It's like trying to do everything on your own. It's like trying to perform your own medical procedures and trying to perform your own tax accounting and everything else. It's like there are people who specialize in this. And what you guys do with helping these kids get those scholarship money. A lot of the schools have automatic scholarships. If you get a certain test score and if you get a certain GPA, you qualify for certain scholarships. That's different than looking for a needle in a haystack and applying for scholarships full time. Do what you can do to help the kids go from gifted in other ways to becoming exceptionally gifted students. That's step one, right? Step one, help the kids to get accepted to their dream school, get any free money available from the dream school. But most families think that it's all on the kids. They're always like, do your homework, study for that
Right.
exam. You need to do good in school because we can't afford college. And if you want to go to college, you have to do good in school. But the reality of it is, although that's partially true, the other half of the equation is the family and the family's financial situation and how you actually pay for college. So the parents think that it's all up to the student, but the parents are more in control of how they pay for college and how much they pay for college than they think.
Absolutely. I also just want to add to that, it's getting more and more competitive for
Mhm.
students with
Mhm.
grades and GPAs and test scores. So it's harder and harder to get those scholarships. And there's also thousands of people applying for these scholarships.
Mhm.
So I'm not saying don't try and go for it. I'm just saying that should not be the only way to go about it. Exactly what you said.
Agreed. Agreed. Love it.
Cool. Thank you so much. This has been a great conversation.
Yeah, my pleasure. Thanks for having me on.
This has been Shift, a college admissions podcast for a changing world, hosted by Cassandra from Achievable with Lance Morgan. And you can get a free trial of Achievable's ACT, SAT, and CLT courses at achievable.me and use the code podcast for 10% off.